We've got Siddarth Purohit, Senior Equity Research Analyst at Angel Broking. Good afternoon, Siddarth. Good to have you on the show. Weak operationally, I mean, it's 100 crore undershooting in terms of the consensus estimate, and also the volume is below what we were estimating. What's your take?
Yeah, in fact, if you look at the operating numbers, certainly it has come below expected, and even on the, let's say, bottom line also. And volume was definitely, I mean, it seems under pressure for this quarter. And it was already kind of, expected that volume will be little under pressure because extended monsoon. But somehow the number also has been lower than what we were thinking of. So overall numbers has been really not up to the mark, that is for sure.
What was the EBITDA per ton estimate that you were working with, Siddarth, if I can have that?
We were expecting around somewhere around, say, I mean, EBITDA and total EBITDA was somewhere expected to be close to 450 crores around in total on a volume estimate of close to 4.8 million tons. So it has been little lower, and in fact, per ton it would have been somewhere more than 900 rupees close to. So I think it has kind of disappointed from that point of view as well.
So, Siddarth, for the pure cement, the cement EBITDA, if you take the number of 304 crores, which is the EBITDA number, and divided by the tonnage, it's coming to around 675 rupees per ton.
Yes.
Is that appropriate? Is that in line with what you were working with?
No,
I mean, obviously it's below.
It is much lower than what.
Yeah. So in the last quarter, it was 994, around 1,000 per ton in the last quarter, right?
Yeah, it has been dropped quarter on quarter. But quarter on quarter, definitely it was expected to drop. But certainly this amount of drop was not expected. Exactly. That is what I'm saying.
Yeah. And on a year-on-year basis, it has been absolutely flat. But then again, it's disappointing because, there's nothing major which has come through in terms of the operational cost benefits as well. I mean, we keep talking about...
Certainly when the volume is not up to your expectations, or maybe when the volume has not met the target, then certainly your fixed cost observation will be low, and which will impact your EBITDA per ton indirectly. And for the entire industry, if you see, except few players which have expanded their capacity, rest all are really not reporting good numbers so far. Either it is in the volume or maybe, in terms of also profitability. So there are very few players which has expanded capacity recently. They have been delivering decent numbers. Rest all industry volumes as well as, maybe realizations, EBITDA is really not up to the market. Up to the, expectations, whatever we were, thinking of so far.
Right. Siddarth, in the year ago quarter, the depreciation was overstated. So by around, I think, 27-28 crores. So it further reduces the kind of bump up that we see on the profit as well as the EBITDA front?
See, anyway, depreciation, we're not bothered about depreciation much, because anyway, what matters is that whether the operational efficiency is coming or not, right? So if I talk about pure operational point of view, then certainly fixed cost observation has not been, that benefit has not been there because of lower, volume that the company has reported.
Right. And Siddarth, lastly, one thing we typically see with Ambuja is whether the numbers are disappointing or not, the stock never disappoints. The stock has still bumped up now and is in the green and has climbed up from the day's low point. So what's your call? It's up almost 1.2% now.
See, we are actually very selective as far as now cement stocks are concerned. Particularly the large one, ACC and Ambuja has really not met the expectations for many quarters. And in the way the stocks has, both the stocks have run up, including ACC and Ambuja both. If they don't deliver for a couple of more quarters, then possibly you might see that disappointing price, because there are better options available for investors in the cement space, which are reporting decent numbers of volume, or maybe they are respectively market leaders in there. And if you just observe, there is one hope that post this deal structure that happened, and now the simplification of the group structure. Now it is expected that both Ambuja and ACC will start expanding their capacity, which has not been done for many years in an aggressive way, and they have not done at par with the industry growth rate. So now that expectations are there, but somehow if that is not materializing in coming quarters and maybe in next 1 year's time, then possibly you might see that there is a possibility that investor can switch over from this to other stocks which are reporting maybe more stable numbers.
Fair point, Siddarth. We'll leave it there, but appreciate you speaking to us today and sharing your perspective on Ambuja earnings. The stock has though seen a smart recovery, so it was down by about 1.5%, is now up about over 1%, almost 1.5% as we speak. A big beat on the bottom line, but that's also because of higher exceptional income component over there. Disappointing as far as volumes, realizations, and revenue are concerned. Let's take a short break at this point. Up next, Getty, the management of Zensar Technologies, also connect with our market guests as we count down to the last 30 minutes of trade.